Welcome to The Explainer. I'm absolutely thrilled to have you here today because, well, we're looking at a company that sits right at the physical intersection of our entire digital revolution. Think about how much we rely on the digital world every single day. We scroll, we stream, we train AI models, and it all feels so weightless, right? So invisible. But the reality is, the cloud isn't actually in the sky. It's grounded in massive, sprawling warehouses filled with metal, silicon, and miles of wire. Today, we're diving into Jabil's third quarter fiscal 2026 financial report. We're going to explore exactly how they're capitalizing on the massive global demands of the tech industry while simultaneously protecting their business from the deep volatility that usually comes with it. We like to call this dynamic the engine and the shield, and frankly, it's just a fascinating look at modern manufacturing strategy.
Okay, let's kick things off with a crucial question that honestly often gets entirely overlooked. Right now, artificial intelligence and software are getting all the hype. Everyone's talking about the latest language models and algorithms, but software doesn't just live in the ether. AI isn't just code. It's massive, power-hungry server farms running incredibly hot 24 hours a day, 7 days a week. It lives in physical data centers connected by highly advanced networking cables. So as the AI boom accelerates at this unprecedented pace, who is actually assembling the hardware that makes this digital world run? Well, that's exactly the role Jabil plays. They act as the quiet, indispensable giant behind some of the world's biggest tech brands, literally building the physical foundation of the future.
Jabil CEO Mike Discure sets the stage perfectly for us here. He explicitly noted that AI infrastructure demand remains extremely strong, and because of that, their full-year AI-related revenue outlook is now meaningfully higher. This isn't just a slight bump or a temporary trend. It's a solid confirmation that the physical build-out required for artificial intelligence is absolutely skyrocketing right now. You can almost feel the immediate operational pull of that demand. Manufacturers like Jabil aren't just forecasting the future. They're urgently responding to a massive influx of orders from tech giants who need physical infrastructure built yesterday.
So, let's get right into the numbers. Here's the Q3 financial scorecard.
Jabil delivered a staggering $8.8 billion in net revenue this quarter. $8.8 billion? What you should really take away from this is the sheer operational scale required to hit a number like that. Think about the difference between scaling software and scaling hardware. A software company can double its users by spinning up a few more virtual instances, right? But scaling physical hardware to $8.8 billion in a single quarter? That means managing unimaginably complex global supply chains. It means securing physical raw materials, coordinating transcontinental logistics, and operating massive factory floors. Beating expectations at this level proves that Jabil isn't just riding a wave of demand, they are actively and successfully managing the immensely difficult physical reality of delivering on it.
Now, it's one thing to generate massive revenue, but it's an entirely different beast to actually keep it. Jabil secured a 5.8% core operating margin and $3.16 in core diluted earnings per share. Let's break down what that actually means for a second. In the software world, we're all used to astronomical margins. But in the notoriously low-margin, high-overhead world of global physical manufacturing, where you literally have to pay for factories, equipment, materials, and hundreds of thousands of workers, maintaining near 6% profitability at an $8.8 billion scale is an absolute masterclass in efficiency. Their core earnings per share essentially tell us that for every single share of the company, their core operations successfully generated over $3 of pure profit. They're balancing massive scale with tight, disciplined execution.
All right, moving right along to breaking down the revenue.
To really understand how they pulled this off, we need to look at their deliberate balance. 48% of their revenue comes from intelligent infrastructure. That's the high-growth tech side. But crucially, the remaining majority is split between foundational sectors, with 36% coming from regulated industries and 16% from connected living and digital commerce. This split is the core of their strategy. It's not an accident. It is a highly intentional, deliberate balance between chasing that explosive infrastructure growth and anchoring the company to highly stable, predictable foundational sectors.
Let's zoom in on that growth side first. The engine, intelligent infrastructure. When we say intelligent infrastructure, we're talking about highly critical hardware. This segment includes the massive server racks, the high-density data centers, and the smart city global networking equipment that physically support the AI boom. These are the complex components desperately needed right now by hyperscalers. And if you're unfamiliar with that term, hyperscalers are the massive, dominant cloud providers, think Amazon, Google, Microsoft, They operate on a scale so large that they essentially dictate the infrastructure demands of the entire internet. And right now, those hyperscalers are leaning heavily on manufacturers to physically build out their AI capabilities.
Driven heavily by those exact hyperscalers in the cloud and data center infrastructure markets, this engine segment saw a massive 21% year-over-year revenue increase. Now, to put that into perspective, a 21% leap in software just means more code executing. A 21% leap in global manufacturing? That means millions of pounds of new physical materials. It means sourcing thousands of new microcomponents, building vast amounts of new factory floor space, and hiring thousands of skilled technicians. It is an explosive, incredibly difficult physical scale-up, and it shows that Jabil is perfectly positioned right at the absolute front lines of the AI hardware rollout.
But, as we know, explosive growth needs a counterweight. Let's look at the Shield, Jabil's diversified portfolio.
Any seasoned investor or business operator knows that explosive growth in tech can sometimes bring severe volatility. And that brings us to Jabil's Shield, their incredibly diversified portfolio outside of just cloud computing. By engaging with a wide variety of regulated and foundational industries, Jabil shields itself from the boom and bust cycles of any single technology sector. Just think about their end markets: healthcare, packaging, auto, transportation, renewables, and energy infrastructure. These are sectors that require highly precise manufacturing, but they operate on entirely different economic cycles than AI. While AI spending might cool down if tech budgets suddenly tighten, hospitals still need critical healthcare devices, and consumers for sure still need packaged goods. These are baseline human necessities that provide profound economic ballast when the tech world gets a bit turbulent.
Consider the automotive and transportation sector, for instance. Despite this area previously being under significant pressure globally, Jabil actually noted better than expected performance here in Q3. In fact, their financial plan estimates this sector will hit $4.4 billion in revenue for fiscal year 26. Why? Well, because modern electric vehicles aren't just cars anymore. They're essentially massive, rolling computers. They require incredibly sophisticated power management, sensors, and computing hardware. Jabil's exact expertise in high-end electronics translates beautifully into the complex needs of modern, increasingly electrified vehicles, proving that their skills are totally transferable across massive industries.
Similarly, their deep involvement in essential, highly regulated sectors like healthcare and packaging provides a steady, reliable baseline. Jabil projects a highly consistent $5.5 billion from this segment alone. Why this matters is pretty simple, and it's the core of the Shield strategy. No matter what the stock market is doing or which tech trend is currently hot, the world will always need advanced medical devices and secure, reliable packaging. That $5.5 billion acts as a recession-proof floor. It's the ultimate operational shield that ensures the company remains stable regardless of macroeconomic storms.
Which brings us to the next point: raising the FY26 outlook. Because this combination of a high-growth engine and a highly stable shield is working so perfectly together, Jabil has found themselves in an incredibly advantageous position. They are confidently projecting an amazing $35 billion in net revenue for the full year. They're maintaining that strong 5.8% core operating margin, projecting $12.70 in core EPS, and generating over $1.4 billion in adjusted free cash flow. In simple terms, adjusted free cash flow is the actual cash left in their pocket after paying for all operations, factory upkeep, and necessary reinvestment. It's pure, unencumbered cash they can use to acquire new companies, build cutting-edge facilities, or reward their shareholders. That kind of cash flow gives them immense strategic flexibility going forward.
So, the crucial takeaway here is exactly what CEO Mike DeStore highlights. The diversified model isn't just about playing it safe. It's actively driving their ability to grow profitably. It allows them to aggressively pursue the high-margin, fast-moving AI infrastructure business, knowing with absolute certainty that they have a bedrock of predictable, stable cash flow from their regulated industries supporting the entire enterprise. This dual strategy, the engine and the shield, is the absolute bedrock of their corporate strategy.
Okay, let's pivot to the long-term vision.
With fiscal 26 looking so incredibly strong, the question naturally becomes, where does Jabil go from here? Well, their trajectory shows a remarkably smooth operational climb. They anticipate closing out Q4 of FY26 strong, with an estimated $9.2 to $10 billion in revenue for the quarter, wrapping up that $35 billion full-year plan. But they aren't just sprinting to the end of the year. They're strategically building a bridge to the next decade of technology, mapping out exactly how to tap into massive, long-term opportunities heading into fiscal year 2028 and beyond.
And looking ahead to that FY28 timeline, Their focus narrows right in on the absolute critical bottlenecks of tomorrow's technology. We're talking about compute and networking, yes, but crucially, power, advanced cooling, and integrated rack-level infrastructure. This is where it gets absolutely fascinating. Next-generation AI chips run so incredibly hot that traditional air conditioning in data centers simply cannot prevent them from melting. The industry literally has to transition to advanced liquid cooling, pumping liquid coolant directly to the microchips. The company that can manufacture these complex, highly pressurized, leak-proof plumbing systems inside high-voltage server racks holds the literal keys to the AI revolution. Jabil is planting their flag exactly there, positioning themselves as the go-to physical problem solvers for the world's most advanced computing challenges.
Which leaves us with a pretty fascinating thought to consider as we wrap up today. We tend to think of the digital world as boundless and limitless, but as our digital demands grow infinitely, how much further can the physical boundaries of global manufacturing, power generation, and liquid cooling be pushed to actually support it? Jabil is proving they're ready to push those boundaries to the absolute limit, but it's a monumental physical challenge that will undeniably define the next decade of our technology. Thank you so much for joining me for this explainer. I really hope this deep dive helped you see the massive, complex physical engine that's actively driving our digital future. Catch you next time.